Good morning, gang. Happy Thursday. So, first thing I want to tell you, and I know somebody's going to inevitably ask, yes, I did turn down that client when I found out yesterday that they were going to require the jab for potential employees. Hence, I won't be working with them. So, yes, I will stick to my beliefs. I'm sorry, but I don't care. Paycheck is not important, as important, if you will, as betraying my conscience. Okay, so let's just leave it at that. All right, but which kind of brings me into a little bit of today. Now, how many of us have ever walked into the convenience store, the auto mechanic, whatever, and laughed at the sign on the wall that says, "In God we trust, all others pay cash"? We've all seen that sign, okay? And everybody laughs at it and thinks it's cute and everything. But there's a lot of truth to it, okay? Because, we all know this one, neither a borrower nor lender be, okay? This is what's keeping our economy afloat right now. And it's all about to come crashing down. And all this was in the news yesterday. And unless you are a financial wonk, okay, you really don't understand what it meant. So I'm going to kind of explain it to you. I know, and everybody's going to say, oh, you've been saying this all year and the market keeps going up. Okay, yeah, all right. The stock market keeps going up. And this isn't about the stock market, but the stock market is predictive of what's going to happen to the general economy. So I want to tell you before everybody goes, oh, crap, I'm not invested in the market. This doesn't matter to me. You're invested in buying food and paying your electric bill. So, yes, this matters. Okay. So I want to explain this. So in the last year and a half, ever since the market tanked back in March of 2020 when COVID started, the market's just been on a meteoric rise north. Okay. And I bailed in December. Okay. So yeah, I've missed probably about a 30%, 40% ride in this. Guilty. Okay. No big deal. Well, gold and silver's done nothing. Silver's actually dropped a little bit since I was buying more. So I look like a financial idiot. Okay? If that's what you think, that's fine. Okay? Like I said, nobody has to agree with me. But this is what I will tell you. The reason the market is going up is because the Fed has been printing money like crazy. We all know that. Okay? And so what are people doing? And we've all heard the stories about Robinhood or about AMC theaters or GameStop or anything like that. And people just throwing money at it, saying, hey, if it goes up, great, whatever it is, blah, 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 throw money at it and see what happens, okay? Because they're throwing free money at it. The Fed gave everybody stimulus checks, and, Illinois reported today that, people on unemployment have been making $35 an hour. Gee, that's rough to live on, okay, for doing nothing especially. But, the free money train has got to stop. We all know that. Now, if you've ever been an investor, I won't even say it more, in this case, more of a speculator in the stock market, you might know what margin is, okay? Margin is what caused the 1929 stock market crash, just to let you all know this. All right? What margin is, and I'll explain it to you on a real simple basis. You have $100 in cash, and you want to buy stock in XYZ company. And stock is $10 a share. Okay, for your $100, you could buy 10 shares at $10. Okay, not talking commissions or fees or anything like that, just straight stock. All right. But with margin, your $100 allows you to buy $150 worth of stock. The other $50 you have borrowed. And we all know interest rates are dirt cheap right now, so margin rates are dirt cheap. So you're going, oh, gee, if I'm paying 3% margin, but the market's going up to the moon, as long as I make 4%, I'm making money using somebody else's money. That's a great deal, okay? And for the last 15, 16 months, it's been a no-brainer. Well, here's what happened in July. Okay, numbers just came out from FINRA, and that is kind of important to know. Okay, FINRA is the Financial Institute or Financial Industry Regulatory Authority. All right, so these are the big boys here. Margin rates went down in July, not interest rates, the amount of money on margin. What does that mean? That means the people who are borrowing money to invest in the stock market are pulling back. They're taking some profits out, okay? They're getting themselves out of debt. I will tell you what happens every time that the use of margin goes down. The stock market tanks, and so does the economy. Now, I've said all year, I still expect the Dow under 20,000 by the end of the year. We're at what? 35,000, something like that. I mean, here, where the hell are we? We are at, 35.3. Okay. So, I'm looking at still a 40% drop in the market. Okay. 45, somewhere thereabouts. Yeah, I'll still say that, because if you have all this money on margin, people are borrowed up to here, and the market starts going down, that $50 that you borrowed on my $100 example, well, now if your stock's only worth $140, the bank calls you up, the brokerage house calls you up and says, you got to give us the other $10. And it goes down to 130. Now they say, oh, you got to give us another $10. And it's a snowball. So how do people come up with that cash? If they borrowed money to invest it in the first place, the first thing they're going to do is they're going to sell that off. They're going to sell stuff at a loss. Well, selling causes the market to go down, and it's a snowball effect, and it keeps going down and down and down and down and down. No different than anything else, okay? Now, we saw this happen in 2001 after 9/11. We saw this happen in 2008. We saw this happen when COVID started, okay? Margin is completely speculation. That speculative money has no loyalty to it whatsoever. It's only there to see if they can make a quick buck. Those people will also bail fast too. And I'm going to tell you this right now. The people that buy on margin aren't going with $100 and buying $150 worth of stock. They're the people that go, I've got $100,000 and I'm going to buy $150,000 worth of this stock and that stock and this stock and everything. And it's going to tank. All those kids playing on Robinhood who maybe are margining, stuff like that, they don't know what a down market is like. They're going to run for the hills fast. That will cause everything to tank in a heartbeat. All right. So I'm telling you this because then the other curveball that you get is you have the Fed coming out on Friday. What do they do with interest rates? Are they dovish? Are they hawkish? You have no idea because they have not tipped their hand whatsoever. And when they do tip their hand, sometimes they come out and do the other thing. You're going to see in the next few days either a massive spike in the market or a massive drop in the market. One of the two, okay, by Monday. And whether you're invested or not, I mean, that's neither here nor there. And no, I'm not giving anybody investment advice, and don't send me emails saying, what should I do with my 401k? I can't tell you that. All right. I'm telling you to watch what is going on. But when people start getting out of debt, start selling off things to get out of debt, that tells you they are worried about where the economy is going. Institutions, okay, when Ford Motor Company or when General Electric or when Microsoft or when Google is reducing their leverage, okay, those are big numbers that you're talking about them selling. Okay, so just pay attention to that, because then the other side of it, when you get their third side to this thing here, is China now wants to get foreign investors to invest in bonds, municipal bonds in China. So China has now come up to the point saying, we can't afford to grow anymore. Who does this sound like? The United States, okay, 30 years ago. We need to borrow money from other countries to maintain our growth. China is now where we were, where the United States was in the 1960s, 1970s. They're going to start borrowing money to maintain their growth. We're at the peak of borrowing money. We can't do it anymore, even though they keep trying. It all comes full circle. So now, as indebted as the United States is, China is now the next one in the Ponzi scheme going, who do we borrow money from? Oh, let's borrow money from, I don't know, let's just pick a country or so. Let's say the EU, okay? And for 30 years, the EU will feed China. And then China will be where we are today, and the EU's like, now we're stuck holding the bag. Who do we unload this to? That's what's going on, guys. That's why you are going to see the economy fall apart, okay? You've all seen the stories, heard the YouTubers or whatever, do your Christmas shopping now because the stuff ain't going to be there around Christmas time, okay? Everybody's putting all this together. This is correct. But seeing those numbers today, that the amount of leverage used on Wall Street is strikingly dangerous for the economy. And I guarantee everybody just glazed right over that story when they said it. I don't understand this. I don't know what it is. That's what's going on, guys. Have a good Thursday. Pinball out.